Hey everybody, it's Friday, December 17th, 2021, back with another dose of economic reality. Hope everyone had a good week. It's Friday. The markets are closed. The market's deep in the red today. We're going to talk about why that is and try to connect some dots here and try to make sense out of all this nonsense that we see right now. Trying to figure out what's going to happen with this economy, prices, jobs, all this debt that has to be repaid by somebody, and a lot more. Let's go ahead and get started. And people say I often have bad news, or some people even say it's doom and gloom. My outlook is not so sunshine, it's more storm clouds. Well, let's start it off with some good news. The good news is the economy is doing so good that they're talking about extending paying back student loans. The economy is doing so good, they're afraid that people cannot pay their student loans, so now they're going to have to extend it. Millions will have to start paying again on student loans. That was scheduled to happen in February, I believe. Well, the economy is so good that we need to extend it. So there you go. There's your good news. Everybody's making so much money. Everybody can just pay off their debt, no problem. But wait a minute. Why do we have to extend student loan repayment if the jobs were so great, if the unemployment was so low, everything is fine, right? Why would that be? And as we know, a lot of students stopped paying their loans, one, because they didn't have to, and two, there have been talks and rumors of the debts just being forgiven. Forbes.com article today, don't expect student loan debt forgiveness next year either. So that whole thing looked like a bait and switch to me. Please let me know what you think down in comments. But a lot of these students that stop paying their loans are going to be severely disappointed when they find out they're not going to give their student loan debt. They're not going to get it discharged in 2022. Maybe down the road. But it seems like once you're in debt, for student loans, they want to keep you in debt. In other words, you can't even disrupt that or discharge that rather in bankruptcy. So you get behind on your bills, you say that's enough, you give up, you file bankruptcy, those student loans are going to stay on your file. There's a few exceptions, but for the most part, they're very difficult to discharge. Yeah, and students are doing so well right now with the rising cost of living. We have parking lots at colleges designated to let homeless students park their vehicles and sleep in their vehicles overnight. And it's only going to get worse. The prices are not coming down. Maybe you'll see some dips, some pullbacks here and there, but it's mostly just a pullback or slight correction then to a higher price. What's going to stop at the Fed? They're not raising rates. They're talking about raising rates next year, next 12 months. And even that was enough to scare markets. Let's talk about the markets. The Dow Jones absolutely decimated, down over 500 points today. It's a second day of losses. So what happens when you talk about pulling the punch bowl away? Well, people start to panic. And it looks like traders, even though it's not until next year, and it could be late in 2022, even though that's the case, or what they're saying is the case, the market didn't like it. So down 500 points. And it used to be kind of a debatable topic whether the market was supported by the Fed or not, whether easy money was the reason for the stock market surge. If anyone ever doubted it, how much more evidence do you need right here? And another recent article comes to basically the same conclusion. The Fed may have to kill the stock market rally to quash inflation. So take your pick. Do you think the Fed's going to get it right where one side or another doesn't get crushed? So if you want to stop inflation, you're going to crush the markets. If you want the markets to keep going higher, you're going to see inflation going higher as well. Will they be able to balance it somewhere in the middle? Well, apparently they're not too confident that they can do it because they're talking about maybe raising rates next year. If they knew how to fix this, why not do it right now? Why do we have to wait? Why do we have to talk about what's going to happen next year? Again, please let me know what you think down in the comments. I don't think they know how to navigate this. I don't think they've lost control, but I don't think they know exactly how to navigate this to prevent damage either direction, inflation or market correction, market crash. A recent article here out of Reason: if we don't get inflation under control, it could unleash some dramatic consequences. Dramatic consequences. Well, right now it's pretty dramatic. Look at the homelessness. Look at all the people in record mortgage debt. Every time the rates drop a little bit, we have millions of people going out refinancing, trying to lower their payments. Why? Because people are trapped under these debt and they're trying to cut back on their monthly expenses. So we see, when we do see lower rates, that's when we see people rush to refinance. This goes on to say America needs to get its fiscal house in order. Well, the house is being flooded right now. So good luck getting that house in order. From this article, inflation at its highest level in decades, but we're not yet looking at a situation like the 70s. No, it's actually worse than the 70s. You see, when inflation took off in the 70s, it came from a very reasonable point for inflation. For example, people with one job could very easily go out and buy a home, an entry-level home. It wasn't that difficult, even with one job. Now with two jobs or two incomes, people are still having to take out enormous mortgages, and they're still month-to-month living paycheck to paycheck for most people, unfortunately. So percentage, it may not be yet like the 70s, but when this super inflation, when this mega inflation started, I don't want to say hyperinflation, but when the inflation really started taking off here just in the past 6 to 8 months, we were already at prices that were way elevated, higher than what we've ever seen before. So it's going to be worse than the 70s, in my opinion. It already is. This article tends to disagree. I disagree with the article. But I do agree with the headline. Inflation, if we don't get it under control, it's going to unleash even more dramatic consequences. And driving down some of the streets here in San Diego, in my neck of the woods here, I couldn't imagine it being much worse. I'm seeing tents now in abandoned parking lots, or parking lots that used to be businesses. So it's bad enough that the businesses are no longer there. Now you see people putting up tents and starting to camp in the lots of some of these vacant businesses. Speaking of home ownership and refinancing, homeowners say no to refinancing despite threat of higher mortgage rates. So we have the Fed out there saying rates are going up, but we didn't see the big rush. We didn't see the big surge for homeowners to refinance. So what's going on? Has everyone already refinanced? Well, rates have been so low for so long that you would think that most people that are going to refinance have already done it. Well, this past week, refinances was down 4%. So we're not seeing the big surge to refinance, and I think it's because most people have already refinanced, and the rates aren't dropping low enough. Even with the threat of higher rates, the rates are not dropping low enough for most people to be incentivized to go ahead and pay those extra fees and refinance again. Please let me know what you think down in comments. And we're going to see this continue. We're going to see the wealth transfer, the rich, the mega rich get even wealthier. Here's a story. JP Morgan hit with $200 million in fines for letting employees use WhatsApp to evade regulators. So they're breaking the law. They're evading regulators. $200 million for JP Morgan, that's a slap on the wrist. That would be like you or me robbing a bank and getting away with a couple $100,000, but having to pay a $200 fine. That's about the equivalent of it as far as what they profit versus what these fines actually are. Some people are calling this a slap on the wrist for JP Morgan. I don't even think it's a slap on the wrist. It's kind of like a little stroke on the wrist. Here, let me take the $200 million. Don't worry about all the other profits. You can keep those. More raises for the CEO and more stock buybacks. Use those profits to buy back the stock. That way the CEOs can also sell their stock at elevated prices. Or is this the beginning of the decline? As the Fed threatened higher rates, and now this is the beginning of a bigger sell-off. Maybe that's why we saw all the CEOs and insiders selling that we saw here in the past couple months. We saw a big uptick in that. Tech CEOs, big CEOs, Elon Musk and others selling big positions. Is this the beginning of something? Please let me know down in the comments. Hope you are all doing well. Happy holiday season. Stay well, stay safe, keep stacking. Bye for now. Peace.